Hi, everyone. Welcome to a new episode. We have a special guest. Some of you might remember Jason Pizzino. Thank you so much for joining us, Jason.
Good morning or good evening. Thanks, Heidi.
Yeah, it's been a while since you've been on our channel. And for those of you who don't know, Jason is a TA guy on YouTube covering all types of markets, cryptocurrencies included. Every so often, I think it's really good to have you on here, Jason, because we don't do TA on this channel. We do focus much more on kind of fundamentals and following more so what's happening, for the news with crypto. So today I'd love to have you on and pick your brain basically on comparing what the charts are saying versus maybe what the news and how that's coming out, and which came first, the chicken or the egg, and which one, to get a more well-rounded understanding of, where we're going at with crypto and what part of the cycle that we're in. So a lot has happened in the past 24, 48 hours regarding news, and also with price, most recently with Bitcoin pumping kind of crazy. We're always happy to see kind of price movement. You are about 10 hours ahead of me, so you can go ahead and tell me what's happening in the future. Good morning.
I'll put it down to that. It's just because we're ahead here in Australia that's why we always know what's going on with the TA. It is the crystal ball over this side.
Life hack. So my first question for you, and what I'm sure is on the minds of anyone, especially people who are new to crypto, they always want to know, what does your crystal ball say? And so for a lot of people, TA and technical analysis, that is, can kind of be this mysterious thing that they don't understand, but some guys are able to call things better than others. So why do you think Bitcoin is pumping now? Is there anything being reflected in the charts, or is this because the CME gap was filled, or was this bound to happen anyway? What are your thoughts?
So I tend to look at it a bit more macro, because that sort of smooths out all of the news and the noise and the nonsense that goes on out there in the media, crypto Twitter, crypto YouTube. There's just so much going on. So why is it pumping now? I would say we're on the pathway to the next bull market. And so we've got a lot of volatility in between those. We have news items coming out, it's sort of dropping the market, everyone's getting extremely fearful. And then we have the reverse in other news items come out and sort of starts to pump it. But if we just scale out a little bit, the macro piece here, from what we've been seeing anyway, from our analysis, is that it looks like we've pretty sure that bottom is in from November. If we take it back even to June of 2022, we were looking at that as being a potential bottom or a very, very significant low. And I mean, that's what I put out on the channel publicly on Twitter and on YouTube, saying even if June 2022, so we're just taking a step back, even if that wasn't the exact bottom, it wouldn't be that far off. And lo and behold, it was a difference of about $2,000 from 17.5 to 15,500. But the timing for November was almost spot on. So in our TA, we focus on the price chart and the time aspect, which I think a lot of guys don't look at time because it's, I guess, mystical for a lot of people. It's very hard to determine timeframes. But when you take a step back, the easiest thing to forecast is time, not price. Like, I never know if Bitcoin's going to go to 100 grand. I don't know if it's going to go to 300 grand, but I have a much better idea of when those major turns are going to happen just based on history. And of course, Bitcoin only has 13, 14 years of history, but we have history of over 100 years for the Dow Jones, for the US markets, and humans make up the market. And we see exactly what humans do on a very cyclical basis. And that's how we use TA. Humans react to the same things over and over again, but this time is different. But the Fed's never done this, but there's never been a recession with interest rate rises. But, just add in any sort of story. It's always a but. Just think about being a kid. There's always a but when you have an excuse to something. Humans do exactly the same thing. So that's why we use the TA to figure out what is going to come next. Look at a timing cycle. And right now it seems like November is pretty much that low getting formed, which is now leading to a lot of events that are more sided with the bullish side than the bearish side. We're not out of it yet, but that's a sort of a rounded answer to give you an idea of TA, price and time cycles, And then, of course, why is it pumping right now in that shorter term time frame?
Yeah, definitely. I think we should dig into the time frame more. Maybe now is a good time.
Sure.
You know,
I'll bring up the screen.
talking about history and comparing Bitcoin's price movements between, you know, let's say there is a very abnormal, some would say abnormal price movement in March 2020. Some call it the COVID-19 dump. It dropped like what, over 50%. So is that a pattern that we can expect to happen again this year? Or yeah, what's your opinion on that?
So with the time cycles, it's probably a good time to bring that up again. We're just looking at significant lows and highs, and you can see I've got them all laid out here. It might look slightly messy if you're just starting out, so I can take off our swing indicator, and there's a few little pieces here in the shorter term time frame that we'll get to in a moment. But leaving that aside for now, the COVID dump, COVID crash wasn't really in tune with it's not really the same timing as now. Right now is probably somewhere more around, here's the previous cycle low, and here's that first pump out of the low. So I think that's potentially what we're going through now. It's just, I'll take that off for a second so you can see. So that's kind of what we're going through now. It doesn't mean that we pump 300% like it did last time. So like I said earlier, I don't know what those prices are going to be. I can have a rough idea of where are the support and resistance levels, where are the macro flips going to be based on our swing indicator here. But I don't know whether this is going to straight away pump to 36 grand or 32, 33 grand, or to this top here at 48 grand. But in terms of time, this was due for a low. And now it looks like we're starting that sort of leg here. So I wouldn't compare it to this March dump. This is one of those things that everyone calls a black swan, which I would say is probably more true to the meaning of a black swan. If you remember, this is why I like to bring up the news, because it's really good to remember what goes on out there. We had maybe 2 or 3 months ago, I think when FTX happened, that was probably 4 months now, but around that period, everyone was labeling everything black swan events. If you remember that, it was like, this black swan's going to come up, and if the Fed does this, it's a black swan, and then this is a black swan, and it was just the narrative title to everything. You can't
predict a black swan. Yeah,
exactly. It wouldn't be a black swan if you're predicting it. Like, no one said that a worldwide flu pandemic thing was a black swan. So I wouldn't compare this to what's going on now. If we did get some other black swan, which we don't know what the event will be, what the trigger would be, what the catalyst would be, then I would just be looking out for support and resistance levels of how that market reacted to the news. So from the pandemic dump, you can see that we held up above those highs. We came and tested that really significant area, and what we would label this is a consolidation. So this was basically accumulation, and the market broke out. So we know it's accumulation after the fact, but at the time, you just have to identify the area, the trading range, which is between 4,200 and 3,100, and then just say, look, there has the possibility to be an accumulation. You only know after it's an accumulation, it breaks out. So that was a significant area. The black swan event came back down, tested the accumulation area, and found support, found strength, which then said, so this is the TA part, which said to the market, there is strength at these levels on the most horrific event that the world has ever seen in our lifetimes, and the market still held at a higher price. That is extremely strong. Like, there's no other way to skin that cat of the fundamentals. So using your news announcements, using your news headlines, and using a chart, the price held up. So with that in mind, and I'll just rush forward into my own question here for the viewers, look at what just happened literally in the last 4 days, 6 days. We had this particular bar here. This was on a daily chart. So even just go to a shorter term time frame here. This bar here on Thursday, that was when Silicon Valley dumped. So Silicon Valley Bank blew up. Everyone got scared because there was a few percent of USDC sitting with the bank, right? And it was the end of the end. All the banks are going to collapse. The The financial system is coming down. That's it. We're ready to dump the entire stock market. Bitcoin's coming down to it. Like, and I go on and on about it because that's how serious it was over the weekend. And a few days later, what the actual, we're at 24,000. I could not have predicted this price just pumping to 24, but I was ready for a low somewhere around the 50% level, or at least seeing how the price reacted at this 50% level. So that's the price. But in terms of time, what we've been telling our members is we're waiting for some sort of low in March. It's typically what happens throughout history. There's usually a low. We get lows in the S&P 500 throughout March. I went back on a video recently, almost 100. I think I did 65 years on the Dow Jones, and there was like a low almost every other year in March. You get lows in March all the time. It's just something about that timing in the markets that people freak out, and we get lows. We get significant turning points. And so we've seen a significant turning point now for Bitcoin. So this short-term news piece, this was essentially, I'm just trying to build up how severe the news was. I mean, you covered it all. It was pretty crazy, right?
Mm.
It was the amount of viewers flowing in, the views, the subs. Like, we know from a retail perspective, everyone was just flooding in to figure out what's going on. And yes, everyone believed that we were about to crash to the next low. Yet we moved the other way. So to me, sorry to make a short story long, is that we're probably seeing a bottom form, and we're ready to mount another period of accumulation and break through the 25. We're not there yet. I'm probably making a few assumptions to the upside just based on what I'm seeing here, but there has been a lot of signs of strength at the moment from this low. We need some consolidation. If we don't and we break through and then get consolidation above, that's even stronger. And I say above the 25K level because this has been the really big, I guess you could say, ceiling that's preventing Bitcoin going up at this point in time.
Mm-hmm. There's also been people claiming that this big or relatively fast movement from Bitcoin is because of short squeeze. Do you take that into consideration as well, or not so much?
I mean, to a degree, there's shorts getting squeezed because we saw the heaviest amount of shorts going short at this level. They were trying to short at the bottom. I mean, you don't know it's the bottom at the time, so fair enough to them, but they need to have stops in play to cover their asses. And so you're probably going to see a massive pump because there were so many people getting absolutely destroyed trying to short a market that was already down on the back of multiple news items. So yeah, we do need to get a pump up, but the key little differences here to note on a chart, to get into that chart reading is the close. So on this side of the bar, so I use the bars. I know a lot of people are used to seeing candles, but when I started learning trading 12, 13 years ago, I started with bars. So that's why I'm used to these. This side of the bar is the closing price. And that's a really key area to watch, along with the low price and the high price. So on each of these bars, we're getting this short squeeze. The close is higher on the bar. This one wasn't as high. Then it started getting higher, and we're still 3 hours out at the time of this recording. On this particular bar closing high. A higher close means that we have further buying to go. So a short squeeze, you could potentially see a short squeeze sort of pump up on the same day and then basically fall and then close lower again. That's just to get everyone out of their shorts, and then the market basically sells off again, back into the position, back into that pattern. But this time we've seen 3 days up and higher closes. So I'm not so sure that this is just a short squeeze. I think there is a fair bit of buying that's been happening, and we've taken out the pricing of this bar here. So this is the short-term stuff. Now, Thursday 9th was Silicon Valley. The news comes and goes so quick. Silicon Valley bank collapsing. All right, no one's scared of that news anymore. This is Silvergate Bank collapsing. This particular bar right here, no one is scared of that news anymore because we've overcome that entire price. The fear started at this price, 23,478. It dumped, and then we had more fear here, and now the market's basically overcome all of this fear by showing you that facts on the chart. Have I lost you?
Yeah, no. It's so funny because I'm also, the forever optimist that people are waking up to the failures of the traditional financial system, and everyone's just miraculously waking up and moving everything into Bitcoin.
It's probably a bit of
But
both, you know?
yeah, of course. No, there people have the phrase too, like show me what price Bitcoin or what movement the crypto has done, and I'll show you the news article that explains why. Like there's depends on, what your filter is,
Yeah.
what you're looking at. You can explain anything from the news, from the price perspective.
The chicken and
Um,
the egg. So it's like, which
exactly.
one's first? Yeah. Well, that's my preference is I'll look at the chart first and then tell you, yeah, there'll be some good news coming out. And then you'll hear some good news coming out. It's more so on the S&P and traditional markets because you've got a lot more insiders and people knowing about the news before it comes out to the millions and millions of people who are trading those markets. They're very old, they're established. Whereas crypto and Bitcoin, the news could come out on Twitter and then an hour later or within that same hour, you start to see it pump. That's the short-term stuff. But if we're looking at, say, like the longer-term stuff here, we don't know why everyone's buying at these lows. I don't know why everyone was accumulating or the smart money was accumulating at these lows between $15,000 and $18,000. But we'll find out in the next couple of months. There'll be some narrative that says Bitcoin is the world. It's definitely not going to be the world reserve currency, but Bitcoin is there to help everyone while banks fail. Who knows what the narrative is? I don't know. It's to make money. I don't think you need to know that narrative at the time. You just need to see the signals that we're seeing accumulation, we're seeing breakouts, and then the news will tell us later what happens. The news is always just reactive. It's just telling you what has happened, not what is going to happen.
Yeah. I know you were showing me a little bit earlier, you had an interesting chart actually showing that of the news versus the price movements of Bitcoin.
So I put this together. I think I did a brief video on this, and then I did a more detailed one with our members as well, because I could be here all day with the news pieces. This essentially, it's just a nice visual representation of how news items don't matter relatively quickly. It could be a day later, it could be a week later. It doesn't really matter. So along with that, because I know you guys are news based and I'm not trying to, shit on that, essentially,
Go for it.
You can use that news to then say, as long as you use the news along with market sentiment. So keep the fear and greed index chart with you. So I'm always going back to a chart, but at least you can keep that. You can see the sentiment. And it's very hard sometimes if you haven't been in the market for like probably 4 years, 5 years, which most people aren't. So to understand how severe some of the other news articles were or the news pieces were. So it's sort of like a precursor in how to use this. So keep that fifth crypto, like a fear and greed index to show you where we're at. And then have a look at the price chart and have a look at where those news items came out. So I call this a random Thursday because when Silvergate came out, I put this together. I'm like, everyone's freaking out about Silvergate Bank, yet it did the same thing on a random Thursday last month. And then I watch all my Twitter comments, and all the comments through the next 24 hours, 48 hours were, you just wait. This has only just begun. The contagion is about to spread. It's all the biggest words that they can find. Sure, we had Silvergate Bank. See, you were wrong, blah, 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 blah. I'm like, well, here's the 50% level. Here are the closes. Bang, we're out of there for now. It happens quicker than I thought. But just using this to go back and have a look at some of those news events, I use this a lot here. There's the FTX collapse. The market overcame the entire move of the FTX collapse in mid-January. So FTX collapsed. That affected millions of people, probably the biggest event that we've seen in our lifetime after Mt. Gox, I would say. Way bigger than that, obviously. And then within a matter of, how many months is that? 2.5 months, 2 months, the market had overcome the entire dump of that period. So that, when you're reading it with the price chart, it's essentially just telling us that this is over and we're getting ready to mount another cause for the market to go up. We don't know what that reason is going to be yet, but we're over it. Everything has been flushed out. That's at least my view based on this particular bar here, because I go back to the next news announcement and go, this was so much smaller. FTX collapsing was such a much smaller movement on price and time. So less people are selling and over a period of time, compared to previous massive news announcements, like the US equities peaked here in August and then they dumped. So that was a pretty big peak for the equities there. Then we went back, there was interest rate hike fears in June. That I think was Celsius and Voyager collapsing as well. So we had all the fear from the what is it? The
Contagion.
Fed, the contagion, exactly. That's all
Yeah.
getting overcome. So we had those fears essentially, to make a long story short again. We had the fears here, the fears back here from Luna and UST, which were real things.
Yeah.
So this stuff affected people. And in terms of the cycle, which we can get on to day counts, this was within the bear market cycle. So those things had to affect the market pretty significantly. Then we started to lose momentum to the downside. FTX collapsing, I think, trumps all of these news events. So I've just got them listed here. It's a bit messy, but FTX trumps Voyager and Celsius going down with the amount of money and the people affected. I don't know. Did you look at any of those numbers?
Well, yeah, it was far more widespread with FTX, obviously, than Celsius. Yeah.
Okay, so FTX far more widespread than that. Far more widespread than Luna and UST, definitely. Sure, the amount of money might have been a bit more, but really it's just fake money with a few people who let it pump up and then crash again. So it's bigger than that. It was bigger than, look, Russia invades Ukraine. That was only a tiny pump here, tiny dump and then pump. Regulation fears, that was in the beginning. So essentially, FTX being like the biggest news announcement, you have to be slightly subjective there. Like you can use some of the data to say, well, yeah, it affected way more people and it was higher money. And then it was the smallest of the drops compared to these two big events. Something's up. So that then switches on your spider sensors and says, well, if we can't dump after this, because at FTX, the next lot of the news, if people have forgotten, was Binance is going to go down. They started targeting Binance. They started targeting crypto.com. They started targeting KuCoin. They started targeting every exchange to say, well, they're next, they're next, they're next. This is what always happens in the media. We just saw it now. Clear example with the banks. Silvergate's gone down. Silicon Valley Bank's gone down. They're next, they're next, they're next. Someone else is next. It's just what the media does. That didn't happen. So then you start to think, well, this is a little bit suspicious. Why is it accumulating, or why is it going sideways when we just saw the biggest event of the entire the entire bear market occur and the price hasn't gone down any further? It's very suspicious. So that's how I'd use the news with the charts. Take a look at it in terms of market sentiment as well. This period had less fear, technically, objectively speaking, on the fear and greed index. The FTX collapse had less fear than the June dump. So we had a higher low. There was less fear in the market, even though it was the biggest event. So I'm like, well, that's a divergence. The price is going down, yet the emotion, the market sentiment is going up. So that's how I was reading this whole area through that. Does that make sense?
Yeah, for sure. And for me, like, I'm just looking at it, I'm thinking, like, especially with Luna, I think a lot of people were still in denial that a bear market could even happen again. There was still a lot of people were talking about, it's going to be a super cycle. Bitcoin's never going to go down again. It's always going to go up because we're changing, like more people are waking up to Bitcoin basically. So it's like people were becoming soft to the concept of a bear market. And now basically, this is just my opinion right now, like looking at and experiencing too, like with the FTX collapse, Toby and I were both thinking like, that's all it's dropping. Like it's so easy. And so it's like, at that point, if you're still holding Bitcoin through all of that, and this is your first bear market, like you're on your way to becoming a hardened hodler, basically.
and a Bitcoin maxi. So don't go too far down the Bitcoin maxi, because then you'll lose the gains in the altcoin seasons.
No, exactly. Yeah. And then you can play the Bitcoin dominance game. But so
which we see a skyrocket. Look at that, it's at 45% now. And I've got another chart with Bitcoin dominance without stable coins. That's even higher. But anyway.
Another one that was
I was just going to say, just to wrap that up, you can really start to see all these fearful items, how fearful the market is. Now, when you scale out, I know the chart looks messy, guys, but now when you scale out, that's what we're doing right now in price. Yet the fear is I would say equal to close to FTX because it's spreading across traditional media, not so much in crypto, right? But in traditional media, you know, the bank's going down, people are freaking out. Where are you going to put your money? All the comments I see on Twitter is just like, what's safe now? Banks aren't safe anymore. Where are you going to put your money? Oh, it has to be Bitcoin, blah, blah, blah. I'm like, it's just the same cycle over and over again. Like
Yeah.
statistically speaking, banks are going to be more safe because it's your cash. You can invest, they insure it up to 250 grand and so on and so forth. I'm not saying don't put anybody in Bitcoin, but you know, if you want the volatility, go Bitcoin. If you don't, then bank is your only option at this stage.
Yeah. I'm not going to give financial advice on how to allocate your funds because we've gone irresponsibly long on
Fair
lots
enough.
of risky things. So yeah, that's Bitcoin, and Ethereum's been doing pretty well also. Is that just kind of like a trickle down effect, or it's always getting bounced
It's
around? Talking about news with Ethereum. Is it a commodity? Is it a
is it
security?
a,
Does it
I
matter?
know, right? That was the other piece. Is it security? Someone I was on a live stream recently and they're just like, Ethereum's been called a security. I'm like, I didn't see that news. It was
No,
just the
exactly.
attorney general saying yes, it's a
Like,
security, but it didn't mean anything. So
yeah.
again, news that gets spread that's not really fact, but I mean, we should expect that. I'll just have a look at this on the chart before we go across to Ethereum.
Mm-hmm.
You can see that Bitcoin had lower bottoms and now is potentially in this March period is potentially putting in a higher bottom. So you can see June
Mm.
low, very significant, November low. Always remember those two on your chart. So lower low, and now we're starting to climb higher for Bitcoin. So the possibility. We need to have a look at the day counts as well before we go too far, but we'll go to Ethereum now. So keep that in mind because that's a pretty easy technical structure that anyone can identify across their charts. Ethereum, Bitstamp chart, that is absolutely fine. So Ethereum was June low. That's the same time period. Here is the FTX collapse. It's a higher low.
Mm-hmm.
So I don't like it's still hard to call that Ethereum is going to be stronger. Where we know, I guess, mathematically speaking, that ETH will produce higher returns than Bitcoin. Like it's happened every cycle because it's a smaller market cap than Bitcoin. So that's
Yeah.
pretty straightforward. But in terms of strength, why was it being bought up at a higher price than the June low when Bitcoin was being bought up at a lower price? So that's like a technical strength piece there. Like what the hell is going on? I don't know what that news is. Anyone could point to a number of things. People can throw in the comments. It's because ETH's Shanghai. It's because ETH's staking. It's because ETH's yada yada. Like I don't know. All I know is that insiders or smart money was buying at a higher price than in June, even on the back of FTX. So the November dump is FTX, and that's all it did on FTX. That little thing there. I zoom out and then take it off log. Like that's FTX collapse. That's strange.
Mm.
Why did that not affect the Ethereum more? I don't know. It was just people losing money on exchanges. There wasn't actually anything wrong with Ethereum. It's now putting in higher lows. I mean, that's all I can say there. I mean, I can throw back to the log chart as well. It's not above its log chart. So this is a logarithmic. You can see me just clicking that at the bottom there. That's your linear. That's the logarithmic. The reason I use this is that if the market can start to move faster to the upside, then of course you're starting to see a lot more strength come into the game. Whereas linear is just 1-to-1. Like that's pretty straightforward. Logarithmic, we break that and then hopefully hold that. That's a good sign that the bear market's over. I like to use the log downtrend as another key macro indicator for the flipping from a bear to a bull.
Mm.
You can see it's already happened on Bitcoin, and Bitcoin, I posted that on Twitter as well. It touched on, and that most markets, no matter where you are around whichever market you're looking at, they will come and test that logarithmic downtrend. So I'm on a log chart. This is Bitcoin. That is from the all-time high. So right back here, this is the March, April top. That's basically when the Miami conference happened and you had Peter Thiel talking about how great Bitcoin and crypto were, and he was dumping billions of dollars throughout this entire period onto the market saying Bitcoin and crypto. Like it's all news articles. You can go and find them. I put it in videos too. And of course, they tell you at the lower swing top and market dumps. So essentially just looking at this log chart, look at that. Just, it was like to the dollar that it
Wow.
touched it. It was just like you could just keep zooming in and zooming in and zooming in and go, how the hell did that happen? I don't know why, but it happens so often. I've gone through 100 years on the Dow Jones and the same thing happens time and time again. So this is a hit. Like I class that as a hit now. Doesn't mean that we can't fall under it. Maybe it does. Maybe it does this. This is what the bears want to see, right? We come down, test it again, then start to spring. Maybe that happens. But nonetheless, it's hit the log trend. It's a good line to keep on the chart and let us know that are we flipping bears to bulls? You know, it likes to catch up to that line as well.
Referring back to your thought of basing this on time rather than price necessarily, where like you're thinking, okay, the high is going to happen in this month. I don't know what the price is going to be, but that's going to be the highest for this cycle, basically. How do you determine your time frames, I guess?
Yeah, I think it needs to determine the trading range of the accumulation. So I would say, going back to 2018, we had, what was that, 4 months of accumulation, a breakout, and then distribution, a drop again. This may have been some accumulation here for a couple of months in that period of November, December in 2019 before we pumped and dumped. But then I would call this reaccumulation. So you have accumulation, which is the bottom, and then you have reaccumulation levels. That was like May, June, July. We had that little pump, retest, and then we broke out. So reaccumulation. When does that happen? I mean, look, it could be at any stage. Going back to the 2015, we had accumulation, breakout, reaccumulation, breakout, reaccumulation, breakout, reaccumulation, and then we went on this massive run. Whereas the other time was like one big accumulation, breakout, distribution, down, and then, you know, all this happened, reaccumulation, breakout. What's happening now? I mean, it's still early days. This could essentially be the accumulation, or this whole thing could be the accumulation before we break out, reaccumulate. You know, I've talked mostly about being like pretty bullish. Looking at that log chart, sure, we could go up to these levels and then sort of like fade out. That would be really bad for bulls. We break above, do our thing. But nonetheless, we'll just talk about accumulation and whatnot in terms of time frames. What I typically like to look at is a 4-year cycle. So I want to differentiate that between the 4-year cycle, which everyone expects to be blow off top, dump, blow off top, dump. A 4-year cycle, I believe it's, if anyone wants to go and do the research on it, it's Hurst theory, like Hurst cycles, Hurst. Everyone might know, say like Bob Lucas and his 4-year cycle. It's essentially looking at a low to a low and then determining, is it going to be a strong bull market or a weak bull market? It's got nothing to do with, it has to show a blow off top and a dump. So, you know, that's how the confusion starts. And then the confusion spreads like that. And people go, well, it didn't work. It's not real. And you go, well, you didn't really use the cycle properly. You can see a bottom, you know, 1,000 days up, 300 or 400 days down, and there's a low. So cycles could be like that, or the next cycle could be like that. It doesn't have to be like a blow off top. Essentially, if we were to see a lower top, then you'd probably see that within the first half of the 4 years. So essentially, if you break this up, there's your 4 years. Halfway point is roughly there. The peak happened in the second half of the 4-year cycle.
Gotcha.
So that's the first half, there's the second half. If it happens in the second half, it's a strong bull market. If it happens in the first half, it's a weak bull market. I think that's what's going to happen after we get this run up. I think this run up is going to be a strong bull market into the second half. It's all macro, so you know we've got to assess it as we go. Yeah. But if we get this second half peak for Bitcoin, we dump, and then we end up getting this sort of thing, and then a dump. Everyone is going to think that we've run up so fast and we're coming again. We're going to hit another all-time high, yet it's going to be in the first half of the four-year cycle. And that is a weak sign, very, very weak sign. So I think it'll catch a lot of people out, and that's where it will crash on. And they'll say, well, the 4-year cycle's broken. And you go, it's not broken. You just need to know how to use it.
Interesting. So yeah, I can totally understand why that would fake a lot of people out. They get too excited thinking, oh my gosh, it's already doing this so fast. It must
Yeah.
be great news, but
You
the
missed the
reality is
bottom.
the
Yeah.
foundation isn't there.
I think the last cycle we had in say the the peak of 2021, I think the cycle was something like this. It's roughly 4 years again. The peak came in the second half, so it's still strong. The peak in April was still in the second half. It was just really, really early. And we thought maybe we'll get a longer bear market, but we ended up getting that next peak in November, which is why I still count November 2021 as the top. And a lot of people want to start counting from the April top. Like, I think that's just putting a lot of counts off from people who are using April. So yeah, it didn't happen in the first, it happened in the second. So yeah, in terms of the timeframes, that's another reason why I think we are at, or we've seen the cycle low in November. You can see that we've done from 2010. This chart just got updated recently, but I don't count this data. This is what a lot of the data is running off in terms of cycles. 2010 to the peak is 1100 days, down for 400, up for nearly 1100, down for 360, so nearly 400, up again for basically exactly the same amount of time as the previous cycle, and then now down again for a couple of weeks longer than the previous one. It's so uncanny how the timing works out relatively well, yet the price is what everyone focuses on and usually gets destroyed during the bull markets. I mean, that's just a natural retail thing to do, is focus on price, because you want to guarantee that if you put your hard-earned money into something, you're going to get something back. 100K Bitcoin, 300K Bitcoin, it's the same thing over and over again.
For sure. The price is a shiny object over here, but the reality is
yes,
timing of it.
yeah, timing is the big one. So, we get to those points in time and the price is at I don't know, 65 grand. Well, you might have to say that looks like time's up, and we're not going to see this big $300,000 Bitcoin. It's just when time is up, time is up. And in terms of the macro cycle, for our for the stock market and the real estate cycle, the time is not up yet. Everyone is calling for a major collapse, but the time isn't up yet. We've still got another few years to go before we do get that major collapse that we're anticipating to be pretty severe for a lot of the world, but it's not yet. We've got some good time to make a lot of money.
Yeah.
And get set up. Yeah.
Put it into Bitcoin, guys.
No financial advice.
Great. Yeah, definitely much different perspective. I mean, I know that we both, you and me and Toby, we all have a very similar overall outlook for Bitcoin and why it was created and understanding that part of it. But to take really good advantage of these markets, to know where you are in the cycle. We're always saying, you can never perfectly time the top or the bottom. That's why we dollar cost average, and all of that is certainly still valid as well. But I think especially for people who are new, and how not only volatile the prices can be, but like you're saying, that the news is as well, can definitely be enough to shake you in your emotions out of a good decision and into a bad one. So anyway, I think this is great for having a well-rounded perspective and more understanding that maybe, is a tool that people can use to better themselves. So
yeah. Hopefully they can use the news announcements with something like this. Go and label up a chart. That's something that anyone can do now. You've got access to free TradingView. You've got access to free YouTube videos with news pieces, and you have access to free crypto fear and greed index. And then you can start to figure out, if you prefer news and fundamentals, label them on a chart and just have a look at what is actually going on in terms of price, because that's where a lot of people fall down, when they're just like, this is going to be the most severe thing, I better wait. And go, well, just go back and just have a look at the price chart, label it on a chart for yourself. Very easy, free exercise to do.
Yeah. I mean, especially if you go to something like cryptopanic.com, there's literally one article saying the price is going to do this, and then one right next to it saying it's going to do something completely the opposite, or this news compared to this news. So it's like, I just feel bad for people who are just like blowing in the wind of whatever article they happen to come across that day.
Yeah, exactly. A price chart just helps keep you grounded in terms of the news items. Know what's going on out there, and then just ground yourself.
Yeah. And then really ground yourself and learn about the cypherpunk movement and remember not your keys, not your coins, all of that good stuff too.
I could be here all day, but I reckon that's a good place to let everyone digest and then come back for some more in another video.
Yeah, guys. So let us know in the comments down below what you thought about Jason's TA, if you found it valuable, if you have other questions that you wish you would have covered that I could have asked him, but I didn't, and I had a missed opportunity, guys, let me know in the comments. And hit like if you enjoy these videos, let us know. And hit subscribe to Jason Pizzino. He has got a YouTube channel, of course. Got to go ahead and check that out. There'll be a link for it down below in the video description. And we'll see you again tomorrow. We'll see what the news brings. And Jason will tell you what the TA brings.
Thanks, Heidi.
Bye, guys.